Howdy there, folks. 2 for 1 here today to react to brand new video out here from billionaire investor Zell. He is talking about the Fed. He's talking about the economy, what he's expecting in the markets. Want to listen to what he has to say. Obviously, this gentleman has a lot of experience behind him, right? He's been doing this game for a long time, so I'd love to hear his take on this. And go ahead and add my little fresh take on it as well and react to that one. Second video, it's a buy one, get one free here today that I want to react to, is a very bearish, and I mean very bearish, Piper Sandler, who believes S&P is going to 3,200 would be a pretty dang epic crash by the end of this year if that was to play out. So I want to hear what he has to say. I want to react to that. I want to give my opinion in today's video. I appreciate everybody joining me. As always, 23,500 plus subscribers now on this channel. You got to be flip my flapjacks. Thanks for being here. Also, if you're wondering, what is that ladder doing back there, okay? My 6-foot ladder, well, there it is, okay? My 6-foot ladder finally came in. I've been needing that, and as you that watch my channel all the time know, I got a smoke detector battery that hasn't quite been up to standard, okay? And so I need to change the battery. I've been waiting for the longest flipping flapjack in time for this ladder to come in. And the story on this is I ordered that 6-foot ladder from Amazon. It's taken like over 2 weeks to get here, and it finally just got here. And the reason, you might ask, why didn't I just go down to Home Depot and get one? Here's the deal, okay? I have 2 hedges on for this year that were just, in case the market tanked, I'm hedged, so just, I'd make some money on that side, flip it into stocks at low prices, okay? One was SDAL, right? And the other is Home Depot put options. Those are my hedges for this year, just in case the stuff hits the fan, as they say, right? And so I'm not gonna help out Home Depot. I can't help them out this year. Any other year, I'll give Home Depot some business, okay? Not this year, okay? That's one of my hedges. So I appreciate everybody joining me as always. And also, real quick here, 2 things. One is the Become a Master Stock Market course about to end as far as that sale goes, and we're probably not going to have another sale on that for a long time, okay? So if you want that deal before it ends, that will be pinned comment down there. And secondly, we're less than 48 hours away from me buying my next group of stocks in the Patreon. So if you enjoy the channel, you want to support the channel and see the stocks I'm buying and selling, check out the Patreon that will be linked in the description area. Let's get into this.
Good to see you, Sarah.
So there has been a bit of a rethink in the markets about recession. Is that something you still expect?
I haven't gone through that rethinking.
You're still negative?
Negative is the wrong word, but when you spread out free money for years at a time, you create, significant drag, and I just don't see how we're going to abilide a slowdown as that whole process comes to an end.
Well, this is going to be a very bearish video, clearly. Zell starting off right off the bat. He's still expecting recession. Interesting. Okay.
The idea would be that the Fed would get really lucky and engineer a soft landing here because the data is strong, the labor market is super tight, and inflation is starting to come down.
Yeah, but is the definition of coming down going from 9 to 6?
Well, it's yes, and then it has further to go. Sure.
Well, but the point is 6 is a
still very high
problem.
Yeah,
and
So you think the Fed's going to have to do even more than the market expects?
I think that I think the Fed screwed up by allowing it to the zero interest rates to go on for too long. I think we're just beginning to pay the price for that. And it'd be nice to say that it'd be great if the Fed got lucky. I've been around for 50 years, and I've never seen the Fed get lucky. All I've seen the Fed do is mistake in terms of not acting fast enough.
So how do you take that view and prepare some of your companies and your portfolios for that eventual outcome?
I think you basically do 2 things at the same time. One, you prepare for higher interest rates and higher costs. And then at the same time, you also prepare for dealing with inflation. So a year and a half ago, we went to our companies and said, hard to imagine we're not going to have significant inflation. And we need to prepare for it, not respond to it. So in effect, we reached out and changed a number of our policies to prepare our companies for escalating costs.
Are you now preparing for disinflation, or you're just not convinced it's there yet?
Preparing for disinflation would be a very optimistic thing to do at this point. I think it's going to take a while for the inflation pressures to ease. And I think that's what we have to look forward to.
Sounds like you think the stock market may be a little too excited about this notion that inflation is coming down and the Fed's going to pause.
The stock market has a long track record of being
All right, before we go any further here, first off, I feel like I shouldn't even try to debate with Sam Zell. It's like debating with my grandpa. It just doesn't feel right, okay? It doesn't feel right, okay? But nonetheless, in terms of inflation coming down, I mean, I would, if I was talking to Sam Zell here, I'd, say, you really think these price increases are sustainable? Do you think, eggs being up 70% sustainable? Do you think milk being up, 15, 20% sustainable? And that's what I would talk about more. I don't think any of that's sustainable. I think we went through a freak situation there that is not lasting. And when it comes to commoditized items, whenever you get these insane price increases, and like if you look at commodities, obviously last spring, summer, they went through this epic bull cycle that we hadn't seen in decades. It had been decades since we've seen that, right? I don't think that's sustainable. It's a possibility it is, but we haven't really seen it. You look back at history, and Sam Zell knows history as well as anybody, and you don't get that just year after year after year for a long period of time, right? You got high inflation for quite some time in the 70s, but there was a very different situation on how inflation was in the 70s versus how this transpired. This transpired because the Fed obviously had rates at zero. States and federal government all pumped money out there. You had supply chain issues like crazy. You had demand for goods go through the roof. And on top of that, you had Russia-Ukraine happen, right? Which sends commodities on this insane bull cycle back in the spring and summer. That's all ended and the commodities have come back to reality, right? And you had all this simultaneously happen. It was like, it's not like it's one thing. It was like 20 things all transpired at the same exact time to get this insane inflation that we had to deal with, and that's now coming down, right? And so those things aren't sustainable. That would be my take on it, and this will end, and inflation will get back to normalish numbers as time ticks on here.
Excited about everything, both negative and positive. And I think, when the stock market reflected the fact that interest rates were going up and inflation was a problem, it was a little slow to pick that up. And then at the first opportunity, the stock market has gone and flipped and said, oh, everything is wonderful, and we're going to have a soft landing. I think both those extremes are unsupportable.
What about real estate, which is a big business for you? It's what you're known for. How much is real estate off the lows, if at all? Because we have seen mortgage rates come down.
Yeah, but, think about the fact that, if you had bought a house in January or February or last November, your mortgage rate would have been 2%. And today it's 6%.
Yeah.
That's
still high.
That's a pretty staggering jump in a relatively short period of time. And I think there's just going to be, I think the real estate industry as a whole is got to deal with bullet loans and all kinds of things that were the result of very, very low, unrealistically low cost of capital.
Yeah, so in regards to real estate, right? And by the way, I would trust Sam Zell's opinion even more on real estate than I would on stocks, just to be quite frank. Not that I don't, care about his opinion in regards to stocks. It's just like his opinion on real estate holds more weight, right? But in regards to real estate, there's definitely, it feels like there's a leg lower to go for real estate. And, I'll take it to two things. I'm looking to get another real estate investment property probably the end of this year or at some point in 2024. I was looking at pricing recently in areas that I want to buy in Vegas. I can tell you pricing's still not there. Pricing still needs to come down more on these homes to make it sense for me to buy one of those properties as a real estate investment property. We're not there yet, man. We got lower to go. And so I don't want to say that's for every single market across the entire United States, but I can tell you a lot of markets got a lot longer to go. The second thing that's very important to understand about this is real estate can bottom sometimes years after the stock market bottoms. And that's something we obviously saw in the great financial crisis where the stock market that is bottomed around February of 2009. Real estate didn't bottom for over 2 years after that, folks. Over 2 years, real estate kept going down. So it's not out of the stretch of imagination. If you think we're on a new bull cycle, right, for the stock market, it's very possible that the real estate industry and real estate prices could continue to weaken for another 6 to 24 months, depending upon how bad it really gets, right? And so that's just something to kind of keep in mind there in regards to real estate. Next one up here, oh boy, Piper Sandler, very, very bearish. S&P is going to 3,225 by the end of this year. What are they saying?
Is a big one because he's at the desk. He's at the set. He's on the set. Not everyone gets to do that. You know that. Like, this is...
I'm honored.
He's predicting the S&P 500 will end the year at 3225, and that's a 22% drop from yesterday's close. And is that... Yeah, that's really something. Joining us now is Michael Kantrowitz, Chief Investment Strategist, Head of Portfolio Strategies at Piper Sandler. Does it start with a hot number today, do you think?
Does the sell-off start with a hot number today?
Is that what eventually causes it? Yeah.
No, I don't think today's CPI report is going to make or break anyone's thesis for the year. But ultimately, I think it's as these hot inflation numbers of the past, plus the Fed's tightening cycle, plus the fact that banks have been tightening lending standards for well over a year, that combination has preceded every single recession. So we've got kind of the three ingredients, when you look historically, that have been there before a recession begins.
That's not news to anyone, what you just described.
That's true. We all know that spring is coming. We all know that summer is coming, and that will come regardless of whether or not we know it or not.
You don't think that we've had last year, and what do you calculate the drop for the NASDAQ to be last year? You don't think that was because of what you just described?
No.
By the way, the NASDAQ at the lows last year was down over 37% at the lows. 37% on an intraday. That's incredible move. You've only seen a few of those moves in the history of the NASDAQ.
I think that while that is, I think the general view that markets last year went down because we were pricing in a recession that was going to come at some point.
Or a Fed, rising rates.
Well, yeah, and I think that's exactly what it was. It was a bond bear market where equities were the victim, something we haven't seen to this magnitude or duration really since the 70s. So the first impact of a Fed tightening cycle always comes through the market through PE compression. That was the story of last year. The next effect with a lag, the long and variable lag we always hear about, hits the economy about 15 to 18 months later. And I think the large majority of that is still ahead. Earnings, employment.
It's funny. This is hilarious. And anybody that's really into economics, you got to find this stuff comical because everybody's got a different opinion on the Fed lag. Some people feel like there's almost no Fed lag. Other people feel like there's kind of a 3 to 6 month lag. Other people feel like there's a 6 to 9 month lag. I am one of those that kind of is in that category, that there's like a 6 to 9 month lag on Fed raising rates. 6 months is kind of my ideal of it takes time to kind of hit the economy. He's talking about 15, 18 months. Like, holy smokers, that ain't no jokers, right? So everybody's got these different interpretations or opinions on this whole Fed lag and when they're raising rates and how long does it take to affect the economy, negative or positive, if they're raising or lowering.
Do you think unemployment goes to what?
We think it starts rising in the middle of the year. Looking at unemployment claims, looking at the unemployment rate.
But in terms of let's just do the headline rate.
So by the end of the year, our economist believes we're up about a percentage point with upside risk. I think
a full percentage point. So if we're at 3.4%, we're at 4.4%.
Yeah, which is minimal. But what we knew throughout history is the things that precede a rise in unemployment are very consistent throughout history. We have, again, those conditions today. How much will the unemployment rate rise? Right. Some of that is still path dependent. How many more hikes do we get? Will oil spike in the next several months?
How much of this is a function of Jay Powell versus everything else?
Well, Jay Powell, I would say he's one of the legs of the stool that gives us a recession. So I think the Fed has already done enough to put us into a downturn in a recession later this year.
Are you the lowest on the street?
I guess.
Yeah, that's definitely an outlier call, but you're willing to...
I'm making friends.
Yeah. But you're willing to put it all on the line for that. The only thing I would say is that there would have to be some really big downside surprises to be worse than what is already
anticipated by
It's not the worst situation for this gentleman to make that call, right? He makes that call and it happens. He's a hero, and everybody's like, wow, you were the lowest on the street and it happened, right? You're a legend. You're the best analyst. It doesn't happen and no one even cares. Everybody's going to forget about this video of this guy from Piper Sandler or whatever. Like, you know what I mean? It's going to be irrelevant if and when it likely doesn't happen.
People, because that's well, what are the lows? What do you calculate the lows for the S&Ps? 3,600 or so, or 35?
Last year?
The recent lows since the sell-off, yeah.
Yeah, 34.91.
So we're not only going to get back down to those, but we're going to breach those and go all the way down to 32 and change.
Yeah, which is about a 15% drop in earnings expectations where they are today.
Yeah, dude, that's tough, man. I've gone through this several times in videos recently, right? What I keep telling you guys, look at the S&P weighting, okay? The S&P weighting and the NASDAQ weighting is so heavy in the top 10 to 15 stocks. And if you look at those 10 to 15 stocks, the majority of those are actually going to see strengthening earnings per share as this year goes along, in my opinion. Not weakening, strengthening. And then a few others are going to, kind of have, let's call it flattish EPS, in my opinion. So if you're talking about earnings really falling to pieces, I think that story's going to get tough. I think it's going to get really tough. So we'll see what happens. We'll see it all transpires. But anyways, appreciate everybody joining me as always. Thanks for being here, folks. I got another interesting video to react to. I don't know if I'll do it tonight or do it tomorrow morning, but I thought that one was intriguing as well. So appreciate everybody. Thanks everybody that supports the channel on Patreon. And if you want to see what stocks I'm buying and selling, plus support the channel, check out the Patreon. It's in the description. And also Become a Master Stock Market Sales about to end. So if you want to access that before it ends, that'll be in the description as well. Thanks for watching. Have a great day.